seen as more of a defensive investment rather than an investment that will bring great returns. Bonds are often used to secure money into the future and are quite different from equity investments for many investors. One saying is that people go to the equity markets to make money and they go to the bond markets to keep that money. And so bond investors are looking for very low risk assets, very low risk products. And of course, in return, they get very small levels of interest or return on the money they lend. So a couple of percent is quite common, and very, very low interest rates are available right now in Europe, in particular in Japan. Now, when a bond is used to finance environmentally friendly assets, and that bond can be labelled as a green bond. And that has quite an impact on who wants to buy it and what sort of activity we see in the capital markets. And what we're really trying to do here is we're trying to explore this climate challenge, but also the opportunity and the sort of investment that's required over the coming 5, 10, 15 years is quite astounding. So the bond markets really unlock an enormous volume of cash. It's a matter of getting it right for what a bond can actually finance. One of the things that's important to note is there's a wide variety of assets which are consistent with a low carbon future. And these involve mitigation assets or adaptation resilience. These are the words we use in a low carbon community, but in the investment community, it's more about asset classes. Solar, wind, low carbon buildings, or at least industrial facilities, public transport systems and electric vehicles, all the way through to agriculture and forestry, including things like waste pollution, recycling and sustainable water. So there's a wide variety of assets which are potentially funded by green bonds, and these are all sort of pieces of the low carbon future which we're painting here. What we've seen over the last few years, particularly from 2012 onwards, was a reasonable growth in the bond market, but the initial issuers, the development banks, were still the same in 2012 and 13. When we saw 2014, we saw the corporates really into the market in a dramatic way, and that changed the dynamics in the bond market and the green labelling of bonds in particular. We saw a steady growth into 2015, and we're looking to see quite dramatic growth in 2016. From 42 billion of labelled green bonds issued last calendar year, we're seeing an increasing diversity of issuers and very strong demand. Some have expectations of $100 billion US in 2016, and we've made a decent progress on that in the first 5 months. Unfortunately, China is yet to really step into the market, but I think what we've seen early in the year is that when they do, it's quite large, and so the People's Bank of China itself estimates that they'll issue around $46 billion US of green bonds in China alone this year. The assets that are funded by green bonds vary dramatically. Renewable energy is, of course, the easy one to get first, and we see a lot of wind and solar being financed by green bonds. We also see a good amount of energy efficiency in the form of low-carbon buildings and other sorts of initiatives. We're starting to see a growing volume of issuance supporting low-carbon transport. And this includes things like electrified rail systems in major cities or other sort of low-emissions vehicles. And of course, water is a huge area for assets and often owned by entities which do issue bonds, such as municipalities or governments. And so we're starting to see a real uptake of the water assets being brought to these sorts of packaged up funding arrangements. The smaller ones there at the top are waste and pollution, agriculture, forestry and adaptation. They're growing very fast. And as we see more clarity on what sort of green assets qualify in those areas come through, we're likely to see some dramatic uptick in those. So what does the Climate Bonds Initiative do? We were formed a while ago by investors. We have a range of things that we do. The focus today, I think, is around the Climate Bond Standard and Certification Scheme. This is a way that we provide definitions for investors and provide clear guidelines for bond issuers so that they can really label their bond with a high level of integrity and get the confidence the investors want. We also provide a lot of information to ratings agencies and index providers, and I'll explore that a bit more soon. And that's a key part of, I suppose, developing this market with a solid basis of data, and that has been a huge success so far. One of our key areas of work this year is around outreach and stimulating the market, particularly in emerging markets. And we're advising various governments and regulators on what sort of policy models and sorts of efforts can be made to bring this sort of money to the table to fund the low carbon plans that they've committed to. In China in particular, we're having really good penetration in terms of use of standards and use of domestic regulations to guide how issuers can label their bonds and maintain the integrity of this market. We're also exploring structures such as securitization. We've seen some good issuance of certified ABS in the recent past. The covered bonds and Islamic finance or green sukuk are also a key focus of ours. And finally, we have a partners program which really provides a platform for those market players who are keen to get further and deeper involved in this, to really be part of those formative stages and how this whole market comes to be. And we tailor those partner packages for various entities from the small to the large, depending on what they want to get out of the arrangement. That's what we do. Moving on to the next area of conversation here. One of the key questions we're asked a lot is, why are green bonds attractive? Why do people think they're good? What's it going to do? And how does credibility, how does the level of green fit into that attractiveness? We can look at it from two sides, of course. This is debt, so there's an issuer of the debt, the borrower, and then there's the investor or the lender. And each of them has a different sort of perspective on what a green bond offers. For an issuer, there is some effort involved in labelling your bond and having a high integrity approach, but there's an enormous value in terms of the diversification of investors which come to these sorts of products. We see that experienced issuers, even in a variety of global markets, will be impressed by the diversity and range of new issuers who are coming to their product. We also see a lot of stickiness with the investors. They want to buy this bond and hold on to it. It's not one that they'll drop fairly easily if they need to drop bonds. So there's an engagement level and a stickiness which issuers also value, because it means when they want to go back to the market and source more capital, there's a good chance they can pick up the phone and have some good success. And of course, the practicalities at the moment are that the demand for green bonds is substantially higher than supply. So we see very quick selling of books, very, very quick closing of these deals. We see strong oversubscription, sometimes 5 to 6 times oversubscribed. And of course, that brings a tightening of yields, and so the transaction costs become quite manageable in terms of the sort of improvement you can get on the day when you price a bond within a range. Of course, the issuer does see some strengthening in terms of its reputation. We've seen some strong media and PR successes around issuers, whether they've been municipalities or authorities or companies or banks. They've seen some significant uptick in how people perceive them. And of course, when you're looking to align your corporate social responsibility priorities across your entire organisation, then how you fund the organisation and the capital approaches you use can also be aligned nicely with the use of green bonds. On the other side of the fence, we have investors, of course, and they're very clearly after these bonds. They've been told, and the mandates that we see publicised around the world are quite strong in terms of diverting and putting money into these sorts of investments. Now, having a labelled green bond helps, of course, because it reduces the risk that an investor or a manager has in selecting an investment. It helps to mitigate that risk. And of course, we also see a strong approach across some organisations with reducing risk exposure through better project management. We do see some premiums in secondary markets, and that sort of lends itself to the supply and demand balance we have at the moment, as well as the stickiness. So that is an advantage for some investors as well. They hold on to these things and they can see a premium. For an investor, getting into the green bond space really does strengthen their reputation. It allows them to offer products to discerning investors that they're working for, or it enables them to satisfy the mandates they've given themselves and the proportionality they're looking to achieve. And of course, one thing we do see very clearly is that when an issuer labels a bond, the investors who are interested in that get more deeply engaged with how the operation works, and of course that sort of relationship is valuable for both. Of course, credibility is key here, and one of the challenges we saw as the green bond market developed and evolved was that as corporates started to come into the market and banks, then there was more suspicion around the claims. But what we do see is that if issuers are claiming benefits, then there's a very clear need for the investors to understand what's going on and protect themselves from the risk of greenwashing. So, of course, a system of environmental due diligence is a really important part of this. And because there's a lot of different types of assets and a lot of complexity in how we align those with a low-carbon, climate-resilient future, it's quite tricky to do this in a simple way. So to complement the existing credit due diligence, financial due diligence is the real need for this sort of view. And we find that most investors just can't do this for themselves. They need specialist expertise. Some of them don't have that in-house, and of course it's expensive to acquire. And of course, they don't want to do it all themselves because they're looking at a variety of deals over time. And to do this deep dive into everything is a very difficult way to operate. So what we see as some key principles that investors want out of this environmental due diligence approach, that they want to see something that's scientifically robust so that they can stand behind the investments and the assets and say, look, this is really having an impact and making a difference. They want to see a good level of transparency, especially around the criteria for what makes an asset green enough, as well as the reporting and management of funds by issuers. And of course, key to this and key to scaling up this area is consistency. And we want to see a level of consistency so that investors don't need to look twice or three times and can be trusting the label that they see in front of them and understand the sort of rigor that lies behind it. So moving on to the next topic, understanding green bond labelling. Now we've seen some very interesting progress in the green bond market so far, and labelled green bonds that are outstanding right now account for around $100 billion US, maybe a little bit more as we move into 2016. And we look forward to releasing our State of the Market report coming up on the 1st of July. So please keep an eye out for that and all the updated figures you can poke a stick at. Outside of what's actually labelled, there is also a much larger universe of climate-themed bonds, which are bonds issued by pure-play companies who are already in these sectors, such as wind or solar or electrified rail. And it also includes bonds that are clearly out there and funding the sort of green assets we want to see, but are not explicitly labelled to the market as green. And we identify those as the climate-themed universe. And that's running at about 600 billion right now and increasing quite strongly. What we really want to see is, for the sake of liquidity and scale, we want to see all of those climate-themed bonds get a label. I think that's going to be useful, and it will help to expand the range and diversity of products that investors can look at, and that's going to grow the market substantially. Of course, what we really want to see is a massive uptick in what sort of investment and finance flows into these low carbon and climate resilient assets. And $1 trillion a year is really our target, but that's a very big circle. Of course, as I said, there's a 2015 State of the Market report out at the moment and available from our website. Come July 1, we'll have a launch of the 2016 version, which we're busily finalising right now. Now, in terms of what labelling means and why it's attractive, there are a few different lenses to look through here. If we think about the reach of this, what sort of program are we looking at, or what sort of approach? Is it voluntary? Is it mandatory? Do issuers have to do anything? Do investors have to see some sort of compliance? Or are we looking at recommended guidelines and principles? What sort of approaches are we thinking about? And what sort of fixed standards and requirements would be useful in terms of providing some rigour? When we think about the scope of what a labelling means, it's really about managing the funds that come through from bond issuance. It's about reporting on how those funds have been used or what earmarked assets are eligible. And of course, it's about identifying the right assets which do actually count as green and understanding what does count as green across these various asset classes. And finally, a key part of this is around assurance. What sort of confidence do investors have that this green labelling is robust and that the assets are there and are going to be maintained, and it's all going to be a minimum risk in terms of reputational branding? As the bond market likes low risk, they of course want to see low risk in this particular aspect as well. So we see first-party assessment as being one of the key features early on with the development banks. They had some credibility and really have a strong focus on this area, so there was some trust there. We've seen a lot of second-party assessment come through as the corporate market has expanded, and there's a wide variety of sort of levels or approaches to second-party opinions that we've seen. And now we're starting to see some sort of third-party verification where there's a clear and objective set of criteria that a verifier comes and looks at and the issuer can clearly understand, and some sort of labelling which has a binary sort of approach. This is good enough. Now, in terms of how this market has evolved and the labelling history we have, there's been a pretty wide variety of approaches. The first sort of activity we saw at scale was in 2007, and the European Investment Bank identified assets which were consistent with its picture of a low-carbon future, self-assessed those, and then laid it all out for everyone to see. That was also followed by the World Bank and using a second opinion from a research institute, but also providing its own label. And as I said before, these banks have internal structures and approaches which really provide a lot of confidence into how money is deployed and lining those up in reporting procedures. Now, 2014 was really where we started to see a lot of corporate bonds come through, and they started to use something called the Green Bond Principles. This is a really useful foundation put together by a variety of players, banks, issuers, underwriters, investors, and really trying to create a common set of principles that can be used. But they are a recommended set of principles. They're a little bit interpretive, and so using those by the corporates was a great starting point. And they often used a second opinion as well to provide some rigor around how they were identifying assets and what was the criteria they were using for each individual issuance. Now, during 2015, we saw the Climate Bond Standard was really taken from a prototype version and put into what we see now as version 2.0. And that was essentially taking the Green Bond Principles, which was a great foundation, and taking it further in terms of defining what is green enough across a variety of asset classes. And that's the taxonomy that we use quite a lot, and I'll use that word again later. And also looking for the sort of eligibility criteria around management of proceeds, requirements for reporting, requirements for disclosure and transparency, and putting it from recommendations into a more formalised approach. And of course, in the last little while, we've seen some countries step in and provide some either detailed guidance or broad brush approaches for how green bonds should work within their jurisdictions. And I think China is a great example of that, where they've issued some quite substantial regulations for the different sorts of issuers in the country, and we look forward to it working with them on that. Now, looking forward, we see a continuing evolution in this labelling approach. We don't have any problem with demand, and we see investors really lining up to get hold of these products. So I think that's something we should take advantage of and not squander, of course. Of course, they're not going to be continuing to want these things if they're not credible, if they're not high quality, and that's really the priority now. Investors again and again have talked to us about standards, assurance, and certification. Those three things: a consistency that comes from standards, a confidence that comes from assurance, and a stamp, a formalised approach for certification, which gives an investor or a funds manager the sort of easy approach to saying, yes, this is good enough. And of course, that's the key aspect of trying to tap into the mainstream debt capital markets, rather than just the areas which have an ESG or environment, social governance, or social responsible investment focus. We want to try and really bring these products to the mainstream debt capital markets, where certification and confidence needs to be high for the decision to be made. Now, there is a risk that if we don't have robust standards and some form of independence around the checking and the assessments, the verification, then we may see some problems with green bonds and labelling, and we're very conscious of trying to avoid those challenges. We don't want to lose the momentum that we've seen already. Of course, governments have a very key role to play here, and we're seeing them either roll out particular regulations or take a strong role in encouraging market development. And we're facilitating quite a few green bond market development committees in various emerging countries at the moment, and that's very exciting for us, helping those countries to get the right people around the table and talk through the sort of things that need to happen for this market to realise its potential. And of course, across those different countries, we have a real challenge in terms of harmonisation, and we're very glad to see a good level of harmonisation already. We just recently released a report around the Chinese regulations and how international harmonisation is already well advanced. And so we're keen to work, of course, with other emerging markets. We're already with Brazil and India and, of course, France in Europe, trying to get some consistency across the different approaches so that international investors have less confusion and an easier pathway to really identify what they want to invest in. What we'd also see is some wonderful signals from the mainstream markets. And in terms of green bond indices, we've seen a great development with various different index providers coming to this area. The names you see there are, of course, mainstream entities, and we're glad to see that the three that we started with has now expanded dramatically, and we're starting to see very serious information providers in the market come to this space. We've seen stock exchanges have some good reactions, and we're starting to see lists come out and trying to promote transparency within their own marketplaces. So that's very encouraging. Europe, of course, leading, and of course, we're hoping to see the Americas and East Asia come on board very quickly. And of course, the ratings agencies, which really are an enormous feature of the bond and capital market ecosystem, for them to step in and have a conscious approach here, like Moody's has, is also very useful, particularly in the US, where we see a lot of advantage in green bonds and a slower speed to market compared to Europe or Asia. So finally, diving into a little bit of detail around the Climate Bond Standard. Of course, this is something that the Climate Bonds Initiative is very proud of. We've done a lot of work with our various stakeholders and tried to create a standard which is practical and useful. There are a few different things that we've tried to bring out here. One is about creating a robust and effective approach. We want to see clear, objective and sector-specific criteria for these projects and assets. That's a key part of what the investors want to see, and it's what the market has lacked a little bit so far. There are also some very clear requirements and mandatory requirements around use of proceeds, tracking and reporting, and of course the use of verifiers in the assurance framework. So I've taken the recommendations and the approaches from the Green Bond Principles and the International Capital Market Association, and we've taken those to the next step and created a set of requirements and actions which can be really clearly shown and demonstrated, and of course, therefore verified. And all the certification decisions are taken by our independent Climate Bond Standards Board. Now, this is made up of fairly serious people, and combined they have a very large level of assets under management, but they provide a formal certification to these green labelled and climate bonds, which I think investors really value. There's a very wide variety of bond types that are eligible for certification, and we have some specific requirements for those, but it's useful to acknowledge that these are quite different structures, everything from a corporate use of proceeds through to a securitized bond. So we're very clear in trying to accommodate all of those different permutations in the standard. And so far we've seen certification of Schuldschein as well as covered and RMBS and ABS structures. It's important to note, though, that this is not a standard around the financial aspects of the paper that's being issued, the bonds that are being put into the market. This is an environmental standard, not a financial standard. And of course, investors do their own and must do their own credit analysis for the product that they're interested in. The Climate Bond Standard is really just about the green labelling of that bond. So how does it work in practice? What we're really trying to do here is provide very clear requirements so that an issuer knows what they need to do and what their bond has to have so it can be labelled as a certified climate bond. We've set it up so that it aligns with the normal phases of the bond market, and the bond market is very much around getting ready for issuance, creating the product, doing all the legals, doing all the documentation, taking it out to market and showing it to the potential investors. Then, of course, issuance of the bond and the post-issuance process is quite a separate process that we've recognised there, and we've tried to build the standard to accommodate those things. And the timing of the pre-issuance process is also something we're very focused on. It's often very quick for an assessment to happen and for a certification to happen prior to bond issuance, and the market forces drive a lot of the timing for issuers. Now, the standard at the moment is in three parts. It has a set of general requirements, which cover the pre- and post-issuance requirements. It talks about the taxonomy and the sector-specific standards, which the projects and assets need to meet, and that refers to a bunch of different smaller documents that have those sector-specific approaches and criteria. And then the standard looks at the specific requirements for different types of bond structures. So everything from, as I said, project bonds through securitized bonds to the normal use of proceeds revenue bonds. The standard also lays out the certification process and guides readers through that step and what sort of things we expect to see and how we expect this process to work. Our governance structure is fairly clear. We have a standards board which really oversees the entire implementation of the work and supervises the various groups underneath it. We have a climate science reference group which really paints the picture of what that 2050 low carbon and climate resilient industry and economy looks like and what sort of infrastructure is there, and helps our technical working groups to build that picture and translate that into very specific criteria. We have a great number of technical working groups operating right now, and if you go to our website, you can see the people who are involved in those, and it's a very impressive list around the world. And they're working hard on trying to create clear and transparent approaches to identify what types of assets within these asset classes are actually consistent with that 2050 1.5 degree or 2 degree vision. And of course, we want to keep these things practical. So we have industry working groups that try and help us to understand what sort of criteria will work, what are currently used approaches, what sort of leverage can we get out of what people are doing already. And all this work is supported by the Secretariat, which I'm a part, and there's a growing team, and we manage the variety of support mechanisms that need to occur. Now, moving to the technical criteria, this is a very sector-specific process. Some of these sectors are quite simple in terms of how you can identify the assets which are consistent with a low-carbon future. Some of them require an ongoing eligibility test, and some of them have a more complex approach to managing risks and understanding the changing forces ahead. So in terms of the completed criteria we have, wind and solar is fairly straightforward, just a few paragraphs of each, but includes not just wind power facilities, but also the value chains and the factories and the various things which go to creating that industry. Similar with solar. Low carbon buildings uses eligibility criteria across different types of buildings. We also have low carbon transport there, which focuses very much on land transport and rail and vehicles. And geothermal is also part of the mix of approved criteria that we have available at the moment. As you can see from the website, we have a variety of different areas which are also underway, and agriculture and forestry and water are very close to being finalised, and we're excited about those. Hydropower will be a fairly quick process, and they're getting underway, and bioenergy has had a good review and is going to come out soon with very specific wording. And of course, we're commencing a variety of other groups to try and cover the vast range of asset classes which people want to see here. So it's an interesting process and a resource challenge, but also a very exciting time for us. Now, the certification process essentially has three different phases to it. The pre-issuance is really where we try and understand, is the issuer ready? Is the bond right? Does it really line up with the requirements? And the idea here is that the issuer wants to be able to use that certification mark in their marketing efforts, in their roadshows, in their approaches to trying to garner some interest and build their book. And of course, because of the timing involved, we really are focusing on the selection of the assets, the projects. How ready is the issuer in terms of their internal processes, even if they're not completely finalised yet? Can they report on the use of proceeds? Do they have an approach? And of course, the issuer needs to engage a verifier to come in and look at those things and understand their readiness and how they meet the requirements of the Climate Bond Standard. So that information can then be reviewed by the Standards Board. Once the bond has been issued, then there's a further process to understand exactly how the bond has worked and how the money has flowed into the issuer, what sort of assets have been funded or identified. And it's really focusing on the actual approach rather than just the theoretical preparations. And that's something that's important for verifiers to be able to provide an assurance statement rather than just an assessment. And it's really looking at the ongoing eligibility, how funds have been used if they're not yet allocated to projects and assets, and the sort of output from the internal systems that the issuer has put together. And the verifier needs to provide an assurance statement, so that can take a little bit longer than the pre-issuance process, but there's less of a timeline, I suppose, once the paper has been put into the market and the money has been received. That post-issuance must happen within 12 months of the issuance of the bond, and so there's a reasonably long period of time. We find that many issuers try and line up that post-issuance with their next external verification, depending on the financial cycles they have, and so some are fairly flexible. Now, ongoing, every year, the issuer must report annually, and they must report about the projects and assets being funded, establish and confirm their eligibility and how the process is being used, and of course how any unallocated funds have been deployed. And that report must go to the bond holders as well as the Climate Bond Standard Board each year. If we take a bit of a picture of that, the pre-issuance certification, there's a few steps involved there for the issuer to get themselves ready, create their own green bond approach and understand what they're really trying to do to get out of it. What sort of environmental objective do they have, as well as what assets they're going to put into their mix. They can provide to us an information form, a climate bonds information form, which is a very useful way to just sort of step up and understand what they're trying to do and help us provide them with the latest documents or latest information, any guidance they may require. They need the verifier to come in and they need to engage a verifier on commercial terms. That's an arrangement between the issuer and the verifier. There's a list of approved verifiers on our website, and there's about 18, soon to be 20. They undertake either a readiness assessment or an assurance engagement at this early stage and provide a report to the issuer. The issuer then provides the report and an updated info form if there have been any changes. They provide that to the Climate Bonds Initiative staff, and we put together the documentation for the board, and the Standards Board considers that and confirms a pre-issuance certification. That then means that the issuer can use the certification mark and all sorts of claims in their marketing material and include that in their documentation. Once they have issued the bond and there's been financial close, then the issuer needs to understand how the money has been used or what earmarked assets have been stacked up. And of course, the verifier comes back and has a look at the real information that's gone through that process or that system that they've created, and understands how the money has flowed or how the assets are stacked up, and undertakes a set of assurance procedures. And our verifiers use an international approach to assurance. ISAE 3000 is the sort of standard that we invoke for the actual steps of doing an assurance engagement, and so the verifiers need to follow that discipline. The issuer then provides us with an updated information form. Things have changed. Often when issuance occurs, the bond is upsized or there might be some other changes that happen. And so they provide an updated form to us. And of course the verifier report, and then the Standards Board confirms that certification. Now that post-issuance certification is valid for the term of the bond and only changes if there are problems that we detect through our reporting procedures. Issuers are welcome to do verification again and again. That's up to them. Some do it 6 monthly, some do it every year, some do it a couple of times across the term, but it really is up to the issuer to see how many times they bring a verifier back to confirm these things. But that post-issuance certification is valid for the term of the bond. We have a pretty good variety of issuers at the moment who've gone down the certification road. There's a few banks in there, some financing groups for ABS. We've got some public utilities, as well as authorities for transport and development bank there from Mexico, and an Indian entity, Hero Future Energies, that was refinancing a wind portfolio, freeing up capital to go again. We see a really interesting range of verifiers, and we have everything from a couple of the big four, and the third one of those is about to be confirmed. We also have a variety of entities that have technical assurance approaches like DNV and First Environment, and people from the sustainability sector, such as Vigio and Sustainalytics, as well as local verifiers, Epic Sustainability in India, Sintao in China. So it's a good variety of operators there who can go along and verify these bonds. And our Standards Board, as I've mentioned before, is made up of very large entities, very serious players, and they provide the investor's approach and the investor's stamp on these particular issuances. We've created a package of documents. This Climate Bond Standard that I've run through a little bit is in the top there. It has 3 different parts and some pre-issuance and post-issuance steps. We also have a series of documents which lay out the technical criteria for the different sectors, such as solar and wind, low carbon buildings and transport as examples. And we're preparing guidance documents which will hopefully bring this to life for people. We have the certification agreement, the climate bond information form are of course available. We're about to release the guidance for verifiers and the readiness assessment protocol. The verifiers are using that already, just finalising that wording. And we're looking at guidance for issuers and investors and analysts coming out in the coming months. What we have seen, I think, is a lot of buy-in from a variety of entities, and whether that's investors or verifiers or issuers, they see the value in going down this road of using a standard assurance and certification model. And we're looking forward to seeing a broader variety of assets being included as we develop and produce the technical criteria. But we're also seeing a really nice uptick in emerging markets, seeing the use and the value of certification when they're looking for international investors. So, time for some questions and answers. Thanks very much for your interest and patience. And if you don't get what you're looking for here, please reach out and ask any questions you have. As I said before, we have a partner program for entities which would like to get more deeply involved. So please reach out to us and we'll provide some more details on that. And of course, our next webinar will be coming up soon, and sign up to our blog for that sort of information. Johnny, I'll hand back to you.
Thanks, Rob. Just a reminder that you can ask a question by using the Q&A box in the bottom right-hand corner. We've already had a couple of questions. Let's start with, could you explain the differences between version 1 and version 2 of the Climate Bond Standard?
Thanks very much for the question. Version 1 was a prototype standard released in 2011 and used a singular approach to trying to certify a bond. It didn't really recognize the two sort of steps, pre-issuance and post-issuance, and it was challenging for a lot of verifiers to be able to provide assurance before the issuance of the bond on the expectation of how things would work. So one of the key differences is that version 2 has that explicit split between pre-issuance procedures and requirements and the post-issuance procedures and requirements. That's probably one of the key differences. Version 2 also uses the Green Bond Principles as a foundation, and I think when the first version of Climate Bond Standard was released in 2011, the Green Bond Principles didn't exist, and so we've now adopted those as a clear sort of endorsed approach, and so it means that if you get certified on a Climate Bond Standard version 2, then you're fully aligned with the Green Bond Principles automatically. And we found that to be a valuable step in terms of enhancing what people were able to do and what investors were looking for in terms of confidence.
There's one more here. There are presently a variety of green bond standards. How do you see the green bond standards develop, i.e. shades of green, the role of credit rating institutions?
It's a very interesting topic, and we talk about this a lot, I must admit. And it's a really interesting time for the green bond market. We're seeing investors get a deeper understanding of what they want and what they don't want. We're seeing issuers understand the reality of getting a label and making it a robust one, or doing it easily and quickly. What is the difference? How much harder is it to do it properly? We're starting to see people understand a bit more about how this can work in a smooth and standardized way. And people see a lot of value in standards, there's no doubt about that. We're hoping to see some coherence across the different standards, and I think the Green Bond Principles is a useful foundation there. And they're looking to enhance and improve those principles every year, so that's really encouraging as well. And we'll continue to make sure that our Climate Bond Standard is aligned with those principles as they're updated. But we also see that some of the standards are very focused on particular asset classes. So the GRESB standards, for example, are very much about the built environment. We see sorts of standards around impact reporting from development banks, which focus on renewable energy and energy efficiency, but aren't really useful outside of those scopes just yet. So it's an evolving field. We hope that we can bring together the sort of approaches, the principled approaches, as well as the scientific approaches to see how we can grow this and scale it up. And of course, tapping into the mainstream capital markets is really one of our key objectives.
Another question here. There are some social bonds issued so far under a sustainability bond concept. Is there any initiative within CBI for addressing these social issues?
At this point, our scope is very much limited to climate change, so low carbon and climate resilient assets. And so social bonds are really quite a different structure. And one of the key aspects of the green bond market to date has been that the underlying structure of the bonds is the same as other bonds that are in the market which aren't labelled green. That substantially helps investors understand what they're looking at. A lot of the social bonds we're seeing are quite different structures and are using different sorts of revenue streams to try and fund and repay the principal. So it's an interesting contrast. We see that what we're doing is valuable in that area because we have a sort of umbrella approach and a clear set of requirements for how you select things, how you report on that, how you manage proceeds, how you identify and continue to provide transparency. So depending on whether you're looking at green assets or climate assets or whether it's social assets, I think that overriding umbrella standard is a very useful thing to use.
For assessing the environmental integrity of projects, are clean development mechanism registered projects required to undertake any additional verification? If yes, why?
I suppose one of the key differences between the CDM and carbon markets approach and what we see in the green bonds market is the basis. So CDM is very much about activities, project activities, and what those things do to impact on direct emissions and mitigation outcomes. So their approach is very much around additional outcomes and how an activity displaces emissions or reduces emissions from other sources. When you look at a climate bond or a green bond, you're really talking about the assets, not so much their activities as much as what they are, what are the characteristics of the assets. So for example, a wind project under CDM is focused on the megawatt hours of energy it produces and the intensity of the grid that it feeds into. But for a green bond, a wind project is a wind asset and therefore qualifies automatically. So there's an interesting difference there. On the flip side of it, a lot of CDM projects are focused on small changes, marginal improvement to the performance of assets. And so, for example, you can do a CDM project for a coal-fired power station that is slightly more efficient than it was before they changed things. Now, that isn't the sort of asset that's consistent with a low-carbon, climate-resilient future and isn't part of that 2050 picture that we use as a scientific basis. And so certain CDM projects would not qualify for green bond status, mostly because of the asset characteristics rather than whether they've been approved by the UN or not. So a different starting point, I think, between the two areas, but some useful overlap.
Another question here, can a green compliance labelling get revoked if, for example, a more ambitious policy or environmental regulation is adopted in the country of issuance?
Yeah, thanks. That's a useful question, and some of the technical criteria we have does refer to performance over time. But most of the time it's on an international or universal basis rather than trying to explore the specifics of domestic or jurisdictional regulation. So, as I said before, a green label for a bond is really looking at the characteristics of the assets being financed. And so whether they continue to meet the sort of criteria around low carbon and climate resilient future is going to be a challenge over time if there is low environmental regulation because the assets won't naturally be improved. But what we see is that a lot of the criteria we're setting is well beyond what we see in terms of regulation. But I suppose, as I said before with the CDM, it's not about the activity or the performance, it's more about the underlying characteristics of the asset. So a bit of a difference there in how you look at it. In terms of revoking a label or a certification, there is a criteria for that, or there is an approach for that, and we see that as a process where if an issuer does decide not to allocate those funds as it intended or as it said it would, or if things have changed substantially for that issuer, then that certification would be removed or revoked after quite a long process of working with the issuer to understand and helping the bond investors to understand as well. But we also see that that's a reality, and some things do change. So it is a part of the standard as we have it at the moment.
To what extent do you see interest from investors in climate bond standards as performance motivated, e.g. to mitigate climate policy risks or stranded assets risk?
So this is, of course, the key discussion around whether assets aligned with a low carbon climate in the future inherently have better performance over time and therefore represent a stronger or lower risk investment for an investor. And that's a very interesting topic and an ongoing discussion around the world. We see that investors are making that decision with their feet by deciding to put certain amount of investments or their money into these types of assets. Now, whether that's driven by a broader approach to balance their portfolio or a belief that these assets are lower risk in a fundamental way is, I think, difficult to really interpret at the moment. But we do see increasing volumes of investor commitments, which I think is a really useful thing to see, and they're being much more public and expressive about that. And we also see very strong statements by the insurance industry. So I think there's a strong recognition that there's a correlation there.
Time for a couple more questions. One here, in which geographies is there the greatest potential for green bond issuance over the next 12 months?
Thanks. In terms of geography, we see an ongoing sort of strength of issuance in Europe. We see a lot of potential for increased labeling and more robust labeling in the US, and we're looking forward to seeing more corporate issuance there, as well as municipalities who see the value in certification and strong standards. But I think in terms of potential, China is really the place where we'll see the most volume of issuance over the next 12 months. And given how close the Chinese domestic regulations put out by the PBOC are to the international approaches we see with green bond principles and climate bond standards, given the closeness of those two approaches, I think it's really useful to see how China will emerge. The Chinese bond market is very large already. It's not a new thing, and so we expect to see adoption of this approach to happen quite quickly.
Any other questions? No? Okay, well, we'll leave it there. This session on green bond labels and standards will run again at 3 p.m. BST. If you know anyone who might find it useful, be sure to let them know. They can sign up on our website, climatebonds.net. Just a reminder that this session was recorded. I'll send that out in the next few days to all those who registered. To keep up to date more generally with all things climate bonds, including future webinars and our market analysis, you can sign up to our blog on the website too. Thanks for tuning in and have a good day.
Thanks, everybody.